Hi everyone, and welcome back to the channel, and welcome back to another video. Today's video is going to be about the total free market cap, the total market cap excluding Bitcoin and Ethereum. I recognise it's been a while since I created a specific YouTube video. A lot of the recent videos have been uploads from the Patreon that I've then released for public viewing a couple of days later or a few weeks later. But yeah, I just wanted to go through the total free market cap because I believe what we've seen recently is a prime example of the market giving us a free wave move to the downside, which kind of changes a little bit on the higher time frame of my view of these waves to the upside of what we might be getting, and it changes a couple of specific targets that I'm looking for as well. So just clear evidence of a free wave move is the fact that many people who follow me know the specific trend-based Fibonacci settings that I have, and one thing you'll note is from high to low, back to the highs, we've pretty much come and tagged our 1.272, a very key level in the trend-based Fibonacci for an ABC correction. A lot of people always look to the one-to-one extension, and it wouldn't have been a bad entry in terms of getting that wick there, but it actually came all the way down. And it coincided with a lot of things happening. Bitcoin dominance going up, Bitcoin going in for that corrective wave structure that was looking for, that free correction. If you've not seen our last video, go and check it out where we discuss that free correction. And a lot of altcoins like Sand, Curve, a couple of others hit some very deep zones that I was looking for, and some went well beyond it. However, we've come back to reclaim some current levels, and one thing I want to talk about here is what I'm expecting now in the coming days, because this kind of wick does induce a lot of liquidity. It's taken liquidity, and you start to get some early longs coming into the market in and around these regions. So one thing I'd be looking for, guys, is just take these wicks and look for that range to be manipulated, and potential drives in the coming weeks for market makers to potentially rebalance the order books. Dips into the actual one-to-one extension, things like this is what I would be looking for. Although, you know, guys, when you're looking for free wave moves, that's as good as it comes. And you know, when you take a look at actual higher time frame daily support there, that's where it is. So when we start to think about where the market has come, the 1.272 of the trend-based Fibonacci, very nice free wave move there. All we need to do now on the lower time frame is just watch for the potential wick fills on the 4 hour. So the way this could look is very similar to how Bitcoin looked in 2018. A lot of people start to see these big V-types recoveries, and it still could be a V reversal, but at the same time you're usually going to get at least another dip back into these regions. So on that 4 hourly time frame, what I want you to do is just take the Fibonacci from low to high of the fibs, outline the 50% region on that Fibonacci, and that could be your potential zone where if the market goes in for a potential expanding flat correction there, up to the negative fibs up here and then back down to the 50 of the wick. That type of wave structure is what I'd be looking for on the total free market cap. I did put in the group earlier, the Patreon group, what I am buying. I did make a buy today. Although I do expect this wave structure to play out, the spot buys between here and there, it's not going to make too much of a difference for me and my own psychology. And you know, if we do extend into the, let's take a look at worst case scenario here. So we've got that Fibonacci there. I mean, the confluence of everything, the negative Fibonacci, the 1.272 is great. We do have one Fibonacci here that coincides with a 1.414, which for the total free market cap would be about the 693 billion zone. So if we did need to go and fill this wick, I'm not really expecting it, guys. If we did, I'd potentially go in for another buy on that altcoin that I mentioned in the Patreon group earlier there, and then look for the retraces back to the upside. Everything on this chart looks absolutely amazing to me. Ethereum went a little bit deeper than what I expected, but nevertheless, the market can do what it wants. I'm never going to be 100% right, and no one's always going to be 100% right. That wick that we saw on Ethereum is something that only ever happens maybe once in a blue moon, guys. It's a very, very big wick, big liquidation event. These things do happen in the cryptocurrency market, but they happen maybe once every 2 or 3 years. When you get to witness it, it's a drastic moment to watch it. If you got the chance to watch it, it's something to behold. It really is when you see it in real time. Sometimes you don't know what to do, but the people that have been here since 2018, 19, 20, you've experienced them moments at least 4, 5, or 6 times. So the more times you experience these types of things, guys, the better it is, the more numb you become to it. But yeah, in terms of wave structure now to the upside, things have changed a little bit. I'm potentially looking at this being the start of the final 5th wave to the upside for the total free market cap, which has changed some of the targets that I had. The major target that I'm going to be looking for is the 2.5 trillion zone. Aligns at the 3.272 and the 3.414 of the trend-based fib, and hopefully from peak euphoric moments here back in 2021 to the lows, there you go, the 423% aligns directly with that zone. So I think a very good selling point for me for altcoins is going to be up and around this region. Of course, the big investments like XRP, HBAR, you guys know I've taken out 30-40% on some of those already, and that's just psychologically to be able to withstand these corrections and be a little bit more emotionally stable when they do come. Profits in the bank is a hedge against these types of moments. Even if you think the market's going to go up higher, these types of moments can be tough to go through if you've not taken anything off the table. For example, Bitcoin, it's gone from 15,000 above 100,000. I don't know any serious investor who hasn't taken any profit off the table to some extent. And the same goes for altcoins that pump 400, 500%. These types of things, when you experience the market so much and you've been through all of these dips, you know the market can throw a spanner in the works like this, which is why after them 300 or 400% moves, I like to take that 30 or 40% out, just to get your initial investment out, get that profit in the bank, and be a little bit more relaxed and remain composed during these types of moments to be able to make rational decisions rather than fearful decisions. And the same up at the highs. When you see the market pumping, let's say we get a big potential ending wave up to that 2 trillion zone, and you're skimming off here and you're skimming off here and you're skimming off there. If the market goes up and you've left a little bit in the market, you're not feeling that fear of missing out. If the market drops and doesn't quite hit that zone, you're still not thinking, oh, I could have had more profit because you've taken some here. And it's the same goes for every psychological move to the upside. 1, 2, biggest psychological move to come is the 3rd wave. Hopefully that's what we get. I'm not relying on it, but hopefully that is what we do get. And you can see in this total free chart, we're starting to now build this curving type wave structure, which is nice to see. We've seen liquidations happen, one of the biggest liquidation events in the cryptocurrency market ever, and prices are back to levels that was at just at the start of January, so something to behold. And yeah, we always like to remain calm in the Patreon group, a very, very good group. Some people have really been able to benefit from some of them downside targets, like that 40% zone for curve that we outlined. Really, really nice zone. Some people got some leverage bids in there. Some people got some spot bids in there. I've even made a couple of bids even higher. It's not all about nailing the absolute bottom for altcoins. It is if you're using leverage, but if you're using spot, the market becomes a lot more simple and a lot easier to navigate. So that's my thoughts, guys, in terms of psychology and targets to the upside, what we might be expecting on the lower time frame in the coming weeks. And yeah, just sit back, relax, let the market do the work. I think 1 or 2 spots did open up today in the Patreon, so if anyone wants to join, go ahead. The link should just be down below in the description. And of course, if you want to check out the course as well on www.cryptoryan.com, that'll be in the description as well. The Patreon members get 25% discount on that. But yeah, just sit back, relax, let the market do the work. I think we've seen the bottom of the cryptocurrency market there before the final wave to the upside, and heading into a big bear market 2026-27. But it's not financial advice, guys. Take it easy.